Welcome to Trading Lounge and the European indices, and starting with the stock 50 here. And this is pretty much the template throughout the European patterns. And we're looking at wave 4 being in play here with wave 1 and 2 and 3 and 4 here. And we're looking up for wave 5. And in wave 5 here, we're looking for 5 waves. We have wave 1. We've pulled back for wave 2 now, and we'll be going up for wave 3, 4 and 5 here. The alternative count is to have wave 3 here as wave 1 and having this as minor wave 2 retracement here. If that's the case here, then we should see a very strong move in this leg here. So that will be worthwhile trading. Now, also in the bigger picture too is the resistance in this grey box here. The lower end 50%, the higher end 61.8%. The closest largest number is 3,500. The 500 is important. It's the 50% retracement level from halfway between this major level and medium level here. So it's a real balance line through this market here. So the more that becomes the support, currently it's resistance, the more it becomes support, the more confidence you can have in the market moving up from that point there. So it is still at risk at these 3-5 here. We need to acknowledge that. But the wave count is giving some potential to the upside. When markets find things as resistance here, at some point then in the future we'll find it as support, but we don't have that support, or rather tested support is what we're actually looking for. But this being the template, we can move into the intraday level here, and we'd been looking for an A and a B and a C wave here, and then we're looking for 5 waves up for wave 1, an A and a B and a C wave, correcting into the 50-60% retracement level here. And yeah, fingers crossed, we should see this market move to the upside here. The 34 is important. This is all part of group 1 here, 1, 2 and 3 here. But 34 tends to be important too in terms of geometry. It's the 34 Fibonacci number, 21, 34, 55, 89, 144 and so on. So that expansion there. Now what we want to see here next is a 5 wave move to the upside here. We need to see an impulse wave here, 5 waves. Once we've got that, that will be a catalyst for higher ground in the 2-hour chart here. And this is the same for the DAX and the AEX and the CAC and so on as well here. So yeah, the more support we can find, or you can find or see on the 34 here, then the better off we are for this. The 15-minute chart here, just drilling in here. Yeah, so wave 1, an A and a B and a C wave for wave 2 here. One of the important things here too in this case is that if we take this high here, and this is just an outside sort of framework to consider, we can look at the 50-60% retracement level here. So while the market is below this 50-60% retracement level area here, then it's exposed to weakness. Once it's above this here, then we can be more confident of a move to the upside from that point there, or from the top here, 61.8%. What we can do in the meantime is we can look closely at an impulse wave developing here. Yeah, so it's we do have an impulse wave in the first leg here, but we would need to see a larger one. Now we've got 5 waves here, so we know that we'll get a correction after that, which we've got here, and then we need to see it build from this point here, building up like this. So yeah, anyway, positive for the short term, but let's pick up that more so on the intraday level with the other European markets there. So the DAX will be the next one that we're looking at, and if you don't mind me just cutting straight into the 2-hour chart from wave 3, wave 4 here, possibly alternative wave 2 here, and if that's the case, then we'll see a strong move upwards. However, the 11,500 is a medium level, and it's something that we really need to get on top of as well. This is just a normal correction across the 11,000, the closest largest number, and this is what we'd expect to see. So support on the 11,000 here would give one confidence for further upside here. Currently, while this low stays in place here, then we do have a nice ABC here on the cash market. If we see a move down here further, then it's going to give us 5 waves down, and that could cause a bit of problems at that stage, because if we have 5 waves down here, then we'll get a 3-wave move back, retesting a large number or close to that area for supply, and then a move lower from that area there. But yeah, the more confidence that you have with the 11,000 being the support, then fine. So as it stands at the moment, we do have a nice A wave, B wave, and 1 and 2 and 3 and 4 and 5 down for the C wave here. But as I mentioned, obviously this trend is down, and if we do get a move here, that's going to give us 5 waves down. So then we would get a natural ABC back again, and then another 5 down. So the more it can develop support on this particular level here, you know, and then taking out these highs here, that would be the setup for trading long there. A little bit like what's sitting over here. So it takes a little while, you know, sitting on this level here. So we'd have, well, you can see it sitting there. I mean, you may make mistakes early in the piece, but as something matures, then you can certainly move into it at that point, you know. And if you do have a loss in here, then don't give up. You know, if you see support, then, you know, have the courage to move in again. You know, sometimes it can take 1, 2, 3 times to get into a trend, and that's fine. A small loss is a good loss, and anything that's controlled is good. So yeah. Anyway, we'll leave that, and I want to move into the AEX, because it was the AEX that really had the best count, the easiest count for the European markets, and you know, had always counted this up here as 5 waves in this particular market, and then we were looking for a 50-60% retracement level here as an A and a B and a C wave here, and it's really played out nicely, and it's given me confidence to bring this count into the US markets as well, because we had a slightly different count, and I wasn't quite happy with that. The US and the Europeans having different counts at this degree of structure, but now they're both in the same count. Slightly different labeling still in terms of the degree of structure, but the count there is fine. So on the 15-minute chart here, a little bit tricky to work out, but basically we'd been working through here as a 5-wave structure. Yes, and there is different ways to count this, but this is the way I started, and we'd found our top, and then we were looking for the retracement level, which we've got yesterday. So now we can look at this building to the upside. Now, this current little move up through here, probably at worst here, it could pull back 50-60% here in 3 waves, and then move up from this point here. Once again, the 50-60% retracement level here would always be a nice place to be on top of if you're going long. I mean, you can build in positions below this level, but it's just, you know, it's just nice if you know, if once you've got nice tested support here, and then looking to move up from that point there. So it's possible for the markets to move up quite strong around this particular area here as well. So yeah, perhaps just allow this develop in the next session, picking up a small position here if it looks okay to you, then certainly building above the support on the 465, and also too in this area here, the 465, 472 and 480 is all part of group 2. So the second time that this market goes in and attempts to get support at 65.72 and so on, then the more confidence you can have in this count to the upside. The FTSE is a bit the same as well. Let me find that chart. Okay, so okay, nice move up here. So once again, just keeping it on the 15-minute chart here, and the same sort of pattern template from the stock 50 here. In this instance here, we're looking at this as an A and a B and a C. We want to be on top of this 50 and 60% retracement level up here. Now we can also expect a reaction from this level here, and just allow that to occur. But just understand that once you've got a nice support on this level here, then it's free to move to the upside. So this will be the risk area. The other good thing about this too is that this is 6,300, so the 300 is a minor level, and it's part of a group, so 6,100, 200 and 300, and support on top of number 3. The number 3 could be at any degree. Support on this would set the target for the next level, which would be 6,500, 1, 2, 3, 5, 8, the Fibonacci series of numbers as price ratios. So that's what we'll be looking at. It's also good to see this bounce off this particular number here too in geometry, because this will be 62% or 618%, percent of the golden mean, the golden ratio. So this is seeing this bounce off here is also part of the importance of a market building to the upside and gathering evidence. But when it comes to trading, then above support on 6.3 here is the trade. We can look at this in the next session too. We'll pull all this apart at the end of the session and see if we've got 3 waves up here or 5 waves up here. But either way, this market's moving into supply area, which just means sellers, and there's going to be a reaction here. Hopefully we can find support on subgroup 2 level here, 65, 72 and 80, and then move up from that point there. So if we see this reaction as corrective, then we can have confidence in buying in early in these stages here, building on these levels here at 6.3. And of course, once this is subgroup, we've got minor group 1 here, the top of minor group 1, and then we've got subgroup 1, which would be 10, 20 and 30. So you can also look to build once you've got a nice tested support on top of this group 1 here. That will give you another degree, another level of confidence there, because support on this level brings the order flow away from the 6.3 here. But until that support, there's always risk of it moving back down here. And group 1, the top of group 1, whichever degree of structure it is, sub-level like this or minor level like this, takes a while to develop support. So it's patience and then aggressiveness into that support. Alrighty, thanks for tuning in. Cheers.